Pitch, How FinTechs Can Build Trust with Financial Services Companies. I'm going to introduce the wonderful moderator, Stephanie Elliot, Chief Operating Officer, Customer-Owned Banking Association. So let's give them a round of applause to welcome them to the stage.
Thank you so much, Lucinda. It's a pleasure to be here today. Good morning, everyone, and welcome to the next session at Intersekt 2025, Beyond the Pitch, How FinTechs Can Build Trust with Financial Services Companies, a session that cuts to the core of what it really takes to turn a conversation into a lasting partnership. My name's Steph. I'm the Chief Operating Officer at the Customer-Owned Banking Association, and I'll be guiding today's discussion. So we all know that FinTech, financial institution or FI partnerships don't live or die on the strength of a product alone. There's a lot more happening under the surface. Culture, trust, alignment on risk, and just how easy we all are to work with. So we've got a brilliant panel with us today who are going to bring deep insight from different parts of the ecosystem. Let's kick off with some quick introductions. Just for those at the back, please feel free to come into the room. There's plenty of seats up the front and also up the end here. That's no problem at all if you want to walk in and take a seat. So I'm going to ask our panellists, Dan, Simon and Nathan, to tell us a little bit about your role in organisation and the perspective that you bring to this conversation.
Shall I start? It's warmer in this room too. I was out there before. So Simon Burt, I am from NGM Group. NGM Group has two retail banking brands, Newcastle Permanent and Greater Bank. One of the largest mutual banks, to give you a feel for size, about over 20 billion in assets. But so that's big as a mutual, but it's not big compared to a major bank. So partnerships is really key to us. My role is head of digital and proposition development. So obviously our digital channels and that's part of our proposition. But what else can we provide to customers? And we're looking to expand that offer and grow our customers through partnerships.
Hi, Nathan Churchward. So Cuscal is a provider of payments through infrastructure, sponsorship, settlement and processing to about half of the banks and many of the most innovative payment firms in Australia. And in my team, we work across all of our products to bring innovative solutions to help the customer success and our partner success in those areas.
Good morning, everyone. My name's Dan Chesterman. I'm the Chief Information Officer at Teachers Mutual Bank, which has about 250,000 members, and we offer 4 brands to teachers, firefighters, university workers and health professionals. Outside of my role at Teachers, I also play a role as a tech advisor to the Johannesburg Stock Exchange and also as an investor and advisor to 3 startups, including 1 in America and 2 in Australia.
Thanks all. Now let's get right into it. So the session is called Beyond the Pitch, but to get beyond the pitch, you need to have a successful pitch. So Dan, can you talk us through when you're approached by a partner, what makes a pitch really stand out to you?
So maybe I'd start with, it's rarely anything to do with PowerPoint. It's rarely anything to do with like the flashiness of the slides. I think the key thing and the thing that I've seen successful is when a startup has a very clear idea of the problem they're trying to solve, and it's a problem that is harder for the organisation to solve by themselves. So the most successful startups that I've seen have been able to take a position which is essentially something which a larger organisation can't do normally because either we're constrained by our 4 walls or by our practices, processes or culture.
Thanks, Dan. Simon, lots of people have great ideas, but financial institutions are limited by capacity, limited by resources. So what's something that you find fintechs working with you tend to underestimate when entering conversations?
I think to Dan's point, one of the really important things is that there's so many great ideas out there, and sometimes this is my first gig at Intersekt. I love Intersekt, it's fantastic, and I meet so many people and you see so many great ideas, but there's only so many we can tackle. One, because of capacity, and also because we're trying to solve certain problems for the bank. That could be how do we solve something? How do we comply with a regulatory problem? How do we grow our customers, offer new propositions? But we can only take on a few, and I think that's really key to there's a capital question there. There's only so much money to invest alongside all of the other things that we need to do to stay as a compliant bank. And also our capacity within our teams. We still have relatively small teams, and to really focus on a couple of partnerships in a year. We work on annual cycles really for investment. That's really the challenge that we need to find.
Nathan, as someone who supports fintech fintechs to scale up. In your experience, what's more important, the what, so the proposition itself, or the how it's implemented?
Oh, without doubt, our most successful clients have had a really clear value proposition, but the ones that have then stood out and jumped ahead have had great people and processes to complement that. So it's not just about the tech, it needs to be an end-to-end opportunity and capability.
Thank you. So let's talk now about the relationship. As you said, it's not just about the tech. And I'd like each of our panellists to share an example of a collaboration that's worked really well and why. Dan, will kick off up your end.
So one of the startups that I'm working with now is not necessarily a fintech, but an HR software as a service. It's trying to solve the problem of gender pay gap reporting, which all organisations have. And what I quite like is, to the point I made earlier, they've taken an outside-in approach and said essentially, each organisation solving it by themselves finds it hard to get benchmarks, to get external comparatives, to get actual insights that a board can trust, rather than it being from within the HR team perhaps marking their own homework. So I think it's a really good example of an organisation that's taken an outside in and has a very clear picture of what value they're trying to create and is solving it in a way that each organisation they target couldn't solve by themselves.
Nathan.
So my examples, we had the founders of AzurePay come to us with a great idea for how to solve a gap in how BPay worked. Talk about starting with a big idea. But it was really innovative. It took Pay ID that was a consumer solution and looked at how it could make it into a business and a consumer to business solution. It wasn't an easy challenge to solve. We had to lean in and challenge and solve that together, but it actually was a really great example of how between Cuscal and our clients we were able to partner and fix an issue, and now they've become a very successful fintech business dealing at the enterprise end of the market as well.
We're actually launching a partnership with a fintech this week, a company called Grocerise. And they're effectively a challenger in terms of navigating this, the specials and the price cycles between Coles and Woolworths. And it's something we're pushing out and making available, their premium service to our customers. But it was something that really, really appeared to us as we were looking at things like rewards at the start of the year. We started talking to them in January to give you a feel for it. So that's, how many months is that? 9. And they came in thinking, this is easy. We'll be able to do this quite easy. But, we said to them, bear with us. Work with us, you can move much faster than we can. But through that time, we've really built trust. That's really a great trust in us, trust that we're moving ahead. Are you still interested? Yeah, we're just going through a monthly cycle and a committee meeting. But if on the flip side of that, the value we can deliver to them, we're spending a lot of money to promote their offer. I had their founder in front of our branch managers in a meeting. There's more than 100 of them, and he pitched to them. They loved him, and I said to them, "There's 900 people behind these people that are about to sell your product." So there's a real advantage to bearing with us and working through that cycle.
Simon, you just spoke about the partnership you're launching this week, and there would have been a lot of people across the business involved in bringing that to life, and you just mentioned that they spoke to the branch managers as part of that. So what internal decision makers do people often look, or people of influence do fintechs often overlook when they're thinking of partnering with you?
I think it probably is easy to feel that you might talk to me at Intersekt, and Mike up the back is head of partnerships. Mike just waved there. Mike would love to talk to you as well. But you might talk to Mike and I, and we think, oh, that sounds interesting. But we might have also talked to 6 other people about something somewhat similar or quite different, and then we go back and we talk to others and we gain interest and work through, working through various stakeholders internally, and how we might push something like, if it's a customer-facing thing, out through our branch networks and so on. So there's, we don't have the layers of a major bank, but we still have layers, and that's all part of making sure we get it right for our customers and everyone's on board. And then, but when we are really lined up, as as I just described, we really go for it. So it's really valuable.
So we've just spoken about when it goes well. Let's talk about when it doesn't go so well. And Dan, can you share an example of, or have you had any learnings from partnerships that have fallen through due to a misalignment of values or expectations?
In my experience, it's less likely to be just values per se, but some of what Simon just talked about, banks generally do have to have longer decision-making processes, and we may well think something's a great idea, therefore we'll do it next financial year. The lived experience of looking after technology for a big or even medium-sized bank is that your roadmap is congested with regulatory work, with aged asset work, with risk and cyber roadmap. So even if an idea is really lovely and doesn't require much work from within your team, you may not have the bandwidth to do it, and that doesn't mean that we don't love the idea. It just means that it might take some time. So I do think you've got to kind of balance and think, if you're trying to engage with a bank, how long will it take? Don't expect that a successful POC goes straight into a scale project. It may well take some time before all of the right decision makings can get lined up. And that's not because we're fat, dumb and lazy, but it's because we actually do genuinely have to take care through governance about the things that matter, and that's essentially our members' money and security and data privacy.
So Nathan, what challenges do you often see fintechs encounter as they scale up, and are these challenges avoidable?
I think one of them, I guess, is going in and breaking and fixing is not necessarily going to be an option. Understanding within this highly regulated environment of payments, in our case, that you need to understand the requirements and navigate those. One of the things is you can then, if you do need to readjust, you've got the trust with the partnership to do that together.
So let's pick that point up. Simon, we'll kick off with you, because Australian banks, as we all know and as we know as the Industry Association, are heavily regulated. So from your perspective, how important is regulatory readiness when you're considering a partnership, and are there any red flags that can pop up through that process?
I don't know whether there's any regulators in the room, but we love regulation. And my one of my other favourite topics, open banking, was just before. But and we have lots of partners, hopefully in the room still, who help us solve that. But the regulation is there. It's really important because it's what keeps our customers safe. It's well, I'll say it has to be there, but it's all of those things. If you go into a contract with us, things like CPS 230 and 234 and so on have to be there. We tend to work with our master agreement rather than yours because it's just easier, because it's got all that in it. Obviously, you've got to comply with it, but it is really important that it's there because it keeps us safe. It's what protects customers' money. It protects the access to customers' data. All of that. What happens if there's a problem? So it is something you have to. It's something that it's a fact of life of dealing with one of us. But it's a really important thing. And I think you mentioned the just that attitude. That push it out and test and break, fix and so on is really not something we can do. We can't, with our digital banking apps, for example, we can't push out a change, and if it doesn't work, pull it back or fix it later. If a customer can't access their money, that's a problem. APRA have a problem with that. A customer has a problem with that. If your data is exposed, that's a problem. None of us want that to happen. Your banking data in particular. So it is a fact of life, but it is really important, and it's just something that it's working with any regulated financial institution you need to deal with.
And that really is the nightmare scenario for us in banking. Anything where customers feel that they can't access their money, because that can trigger bank runs and other kinds of behaviour which can be amplified in the age of social media. So Dan, what advice would you give fintechs trying to align with a bank's risk appetite without losing their agility?
It's probably, aligned with what Simon's just saying, thinking about regulation not as red tape or bureaucracy, but actually the intent of most of that regulation is to protect our members and their interests. So, 230, which we've referred, we sometimes use arcane terms, and it abstracts from the fact that that's actually saying when a customer needs their money, they can get it. That we've got an obligation to make it run critical operations at a certain level of redundancy and resilience. When we talk about 234, that means we will protect from an information security perspective, that we will not expose the data to unacceptable risk. So I think for any fintech or startup trying to work with a bank, engaging with with the mindset that actually what I'm doing is additive to that, and if we do, rather than fail fast, it's we talk about fail safe and learn fast, which is a slight wrinkle on the idea of move fast and break stuff, because really banks can't do that unless it's a very safe experiment.
Nathan, what options are available to banks that are sitting outside to fintechs sitting outside the regulated environment at the moment that are looking to scale up and want to provide assurance to their partners?
I'll focus on payments because that's, I guess, the area that we look at. Under that, you do need AFSL to provide a non-cash payment facility to your customers, but you can white label capabilities from someone, which then means that you're representing their product and you can embed their product into yours. If you do want to create proprietary capabilities that go out to those customers, that's then when you step up and look at your own AFSL requirements, because you're the one that is then making that representation to the customer of what the payment service is.
Dan, if a fintech does get a no from a bank for regulatory reasons or other reasons, what should they do next to keep the door open?
I mean, I think even a no is a gift in a sense. You've got to, I think, engage with that productively, understand what was it that potentially stopped your solution being worth paying for. Was it just bandwidth and time and contention, in which case, dust yourself off and go to another bank. But if it actually genuinely was something which was difficult to implement or different to achieve the value, maybe you've got to refine your value proposition. And I think that sometimes the more successful startups or fintechs that I've seen have been ones that have been able to make those sorts of adjustments to ensure that they haven't just identified a problem, but they've also developed a solution that is implementable.
So is it a little bit like when you don't get a job after an interview, you should go back and ask for some feedback?
Yeah, totally. I mean, getting feedback is obviously a key part of it, but also being able to refine and work out how you embed that feedback into the next time that you're making a proposition. I do think thinking through the last mile of actually implementation is something that, it's easy to spot a problem, it's harder to develop a solution that's actually able to be implemented.
Simon, if a bank and a fintech have entered a partnership and it doesn't work out, is there a way, in the words of Gwyneth Paltrow, to consciously uncouple?
I was thinking when Dan was talking there about the, in that relationship sense, it's not us, it's you. It's not you, it's us. Or it's not the right time. But it is really sometimes that, there's a great idea that we might see, but it's just not the right time. There's probably people in this room thinking, Simon, when will the right time be? But in the words of Gwyneth, which I had to confess, Crystal, who's also from my team here, said, what's this quote about, this conscious uncoupling? So now I understand it. It's quite civilised, isn't it? But when we enter into these partnerships, we really think about what's the exit strategy. Contracts have termination clauses and so on, but truly, if we're putting something in front of our customers, what if we've got to take it away? How will that work? How would we navigate that? If it's a service someone's providing, it might be something that keeps us compliant in some way. What if that's not there? What's the way out? So we really go into these things with our eyes wide open on how that might work. Because of course, there might be a funding pathway. We'd want to understand that in terms of how the organisation's funded, based on its scale, etc. We'll really think carefully about exit strategy in that sense in particular.
So time flies when the insights are flowing, and we have been asked to make up a little bit of time with this session. So thanks, panellists, for keeping it tight, which means we can go to our final two questions. So far we've covered the full journey from pitch to partnership. So before we wrap up, let's look into the future. And Nathan, I'll kick off with you. What trends do you see changing the way that banks and fintechs work together in the next 3 to 5 years?
So over that time, we're going to see significant changes to licensing. At the moment, we have quite general licensing around the sort of this non-cash payment facility, and you'll see the consultations and others that are coming out from Treasury over the last few years are focusing on much more granular use cases, and that's actually a really great opportunity for fintech because it will separate what is the financial product from the services that are being delivered to customers. It means that the roles then complementing the financial provider and the service provider start to become a lot more clear, and we can define our roles and responsibilities and start to collaborate really clearly for great customer outcomes.
Simon and Dan, would you like to chip in?
So my view is that we just had a panel on open banking. I think that both technology and regulatory frameworks that enable safe data sharing will provide a really, I think, significant suite of opportunities for people to think about ecosystem opportunities that are broader than just the existing players.
Yeah, I agree. I think partnerships are going to become more and more important. CDR is one of those spaces, in terms of data sharing and so on. But I think as as customer-owned banks, as challenger banks, that's something we should be good at, and we, partners would definitely help us for that. With that, as well as solving other problems, there's new problems like ESG. How do we get better and reduce our output and so on, in terms of, as we probably end up with targets, as well as delivering more value for customers. We just don't have the scale to do all of that ourselves. So, looking forward to many more partnership opportunities.
And Simon, I think you raised a great point there, which is customer-owned banks and fintechs are both challenger industries, and we're both looking to grow and scale up, and we want to better support our community. So we're really keen to keep the conversation going with you about how we partner effectively to do that. Final question to our panellists: what's one piece of advice that you would like to give any fintechs in the room looking to partner with your organisation? Dan, we'll kick off up the end with you.
I think maybe it's cheekily two pieces of advice, which is one, be really, really clear on the value proposition, the problem you're trying to solve, and then engage, as empathetically as you can with a bank that's likely to move a little bit more slowly than you.
I think for me, look for regulation and compliance as your competitive strength and competitive advantage. Don't look into it as a barrier or an overhead.
Relationships, trust, timing, are probably everything.
Thank you again to our panellists for joining us today, and thank you all for coming along to this session. Great to see you here. And if there's one thing that's come through today, it's that it's not just about the tech, it's also about the trust. So enjoy the rest of Intersekt, and we look forward to keeping the conversation going. Over to you, Lucinda.